Watch how to figure out this.
On your phone, go to IG. Cleo, what's up?
I'm hearing you double.
On your phone, go to IG. Cleo, what's up?
I'm live. I don't know if everybody can see me, but hello. We are having a little bit of technical difficulties right now. Carl is on screen, but you can't see him. But he is on Instagram Live. How do I join your live? Okay. I'm in there. You don't see me? All right, so everyone, thank you so much for joining us on our first ever edition of Money Monday. My name is Alexis Milord. If you're not familiar with me, I am a realtor in the state of South Florida. Let me just take a minute to share with you what my vision and my goal for this Money Monday segment is. There we go. 1 second. Okay, I requested you. There we go.
That works.
Is Alexis being Teddy Riley? I'm not sure what you mean by that, Cleo, but hello.
That's not her fault.
Okay, everyone. So my vision for this Money Monday was to stop the generational curse that we as a Black community have when it comes to money and finances. So this is what we're going to learn. This is what we're going to teach you, how not only to better your finances or start with your finances in a good place if you're a young person, but teach your children and their children and so on and so forth. So today our topic is obviously going to be the real estate market. I would like to go ahead and start by giving a brief update on what's going on. If you follow me on Instagram, you know that
That's Miriam.
I'm not sure. Let me put the volume down. Is that better?
Yeah.
All right. So I would like to get started with a little bit of a market update. If you follow me on Instagram, you know that the market has pretty much been stable. There are less houses that are being listed on the market, which of course has an effect on the average home prices sold and days on the market. Actually, the homes have been selling quicker, the homes that are on the market. So for right now, the market is definitely stable. And I want to take a step back and introduce formally Carl Mesias, who is a loan officer. Hi, Carl. Thank you so much for joining us.
Anytime. Pleasure's all mine.
Do you want to give us a little bit of a background, brief introduction?
Let's see. Carl Mesias. I've been doing loans for 3 years now. Here to answer any questions. I don't really have like a major background in it. I mean, like if you have to, like, if you have questions, like, by all means, DM me, email me. I'll answer any and all questions. Text me. You gotta find me. But yeah, pretty much everything what Alexis is saying about, well, we'll be saying about the market is pretty spot on. Like, we've had other discussions. I don't know how this is coming through. Like, I keep seeing like a loading sign, so it's kind of throwing me off.
You're fine. We can see, we can hear you fine.
Okay. Yeah, you know, and I do work in a Spanish office, so you definitely will hear Spanish people in the background, you know. But welcome to Miami, you know. But what do we got?
All right. So let's jump into it and talk about what are some qualifiers for people who are looking to get a loan right now.
Right now, you definitely want to have 580 credit score or higher. Definitely want to have at least 3% down. 3.5% down, right?
Okay.
So we'll say if the house is $100,000, you want to at least come to the table at $3,500. But you also want to keep in mind you are going to have closing costs. Good rule of thumb, closing costs are really about 4.5%, 5%. So that's always something to keep in mind. mean, like we all know, you'll never find a house in South Florida for $100,000. Well, not a 3.2 anyway. But,
Or not
a lot
something
of
that's
people out
moving
there.
ready.
Oh yeah, let's talk about that, right?
Okay.
Everybody wants moving ready. Um, what else? 3 bedrooms, 2.5 bath, pool,
Maybe a pool.
right?
Oh,
Right.
and they want it to be
And
like upgraded appliances, something that looks like HD TV, just came and remodeled.
Right. And they want it for 2008 prices. It's not happening, right? Let's be realistic. And realtors as well as lenders, we don't control, like, we don't change the price range in order to put more money in our pocket. So like, let's not think that either. But what common things have you run into? What kind of challenges?
Common challenges as far as what? The market or dealing with clients?
What difficult customers? Speaking of Apex, what's up? Different customers, things like that.
Well, I would say the number one is knowing that you want to purchase a home, but not actually knowing what it is that you want in a home. And you're looking towards the realtor to make the decisions for you. And we're not allowed to do that. We can guide you as much as possible, tell you this way might be better than that way, but the decision at the end of the day is up to you. So that would be one. Another one that I would say is definitely people thinking that working with more than one realtor on a deal is okay. It's not okay.
It's disrespectful. Definitely disrespectful. Because, I don't think they take into consideration that they're putting money in your pocket or taking food out of your pocket. Taking money out of your pocket the same way. It's like, why are you dating multiple people at the same time? Right? Because you have to build a relationship with your realtor, right? And if you guys aren't on the same page, that's when, like, I guess the disconnect comes into play.
Yeah, and not only that, realtors all have access to the same database. So there's not one thing that one realtor is going to look at that the other cannot see. We cannot put houses on the market and we cannot take houses off the market unwillingly. So, and that comes down to another thing. You have to, as a client, you have to realize that we are only as good as you are. So if we ask you, turn in this paperwork and you take 10 days to turn in the paperwork, what do you want me to do? If you come to me and you have a pre-approval for $220, but you want to buy a house for $320, I can't do anything about that.
That's not happening, right?
I can only do what's on the market.
That's big.
And as a professional, I don't want to take you on a roller coaster ride. It's already a roller coaster ride as it is. I don't want to look at properties if you're not approved. I don't want to look at properties if they're out of your price range, and then you're looking at me like I'm not doing my job.
Right. Now, what's up? Yeah, I always tell people, like, it makes no sense for us to go look at Bentleys if you could only afford an Ultima Plus. You know what I mean? Because that's a waste of time, especially if you're trying to move immediately, right? So you kind of want to shop within your budget. The reason that realtors express to people that they need to get pre-approved first is so it's not a waste of anyone's time.
I wish you guys were live on Facebook so that I could bring your comments up on the screen. But we have a comment that says we have to be realistic about what we want. Absolutely. You have to be realistic about not only what you want, but what you can afford. Because that's what it comes down to.
Definitely. And that's a big thing. But even before that, you want to make sure your credit is up to par, right? So you want to make sure that you at least have a 580. I mean, that's what we ask for at PRG. At least have a 580. And you want to make sure that your debt to income is below 50%. Like that's
a big one.
So those are definitely things to keep in mind, especially when you're about to shop. You want to speak with the lender. You want to speak with the lender to know exactly where you're at. The easiest, I always tell clients that the easiest way is if you make $3,000 a month, you want to make sure your monthly recurring bills are less than $1,500. Like just something simple like that. So let me ask you, do you think the market's going to crash?
Everybody is hoping that the market crashes the same way that it did in 2008. And honestly, the way that the market's going right now, it's pretty stable. Do I think it's going to crash like in 08? Absolutely not. Do I think it might take a little bit of a dive? Maybe. but I don't think it's going to crash the same way that it crashed before. What do you think?
Yeah, I don't. I mean, I don't see it crashing. Like everybody wants to short sell the real estate market, but I don't see it crashing at all. Like it might take a dip in prices. But when I say a dip, I'm not talking like $20,000. Like everybody expects like a huge dip, but I think it's gonna be a slight dip, like a market recorrection. But I think that's it. You know, there's been a few different articles. I'll post it like after this. I'll send it over to you. But there's been I sent it to you earlier actually.
Yes.
There's oh sorry
Debt
Mel
to income
Green
ratio is very
520
important.
said debt to income ratio is very important, especially during this time. Yeah, exactly. Matter of fact, he bought a house last year. He knows.
Congratulations.
Yeah, yeah. He knows. But like, you definitely got. I guess when you're on the outside looking in, or before you even start, you don't think about these things. So like, that's why we do things like this.
It will become
Okay,
soft.
can't quit now. Says it'll become soft, but it won't crash. Monica, what's up? Yeah. Sorry.
Hi
I don't think
everyone.
it's gonna crash.
Sorry to cut you off, Carl, but if everyone could try and join us live through the Facebook channel, that way when your comments come up, I can feature you on the screen. I would love to feature you on the screen. If you don't know what my Facebook is, it's the same as my Instagram name, Oh My Lord, OHMI_LORD.
So, just yeah. Other than that, I mean, what else we got? Oh, let me just say this and I keep a checklist on my desk just for everything. If you do want to get pre-qualified, you definitely want to speak to a lender. You want to have your 2 months of paychecks. Sorry, yeah, 2 months of paychecks, 2 months of bank statements, of course your driver's license, your social security number. And you can't really approach a lender and just give them scenarios, like spitball scenarios, and expect them to give you like a pre-approval on spot. Like it doesn't work like that. We actually kind of take things into consideration from your credit report to your debt to income ratio, how much you're making, and how many liabilities you have, things like that. Let me ask you this: what was the biggest challenge that you've run into so far?
I would say the biggest challenge that I've run into so far is just going back to people and their expectations and, not having the money, but knowing that you want to purchase. So you can't have one without the other. And that's a biggest one. My biggest pet peeve, which actually inspired me to create the series, was that I was having clients come to me and their credit scores were shot. Um, Making barely enough income, but they have so many credit cards open and their debt to income ratio is terrible. Or you just purchased a brand new car on a government salary and now you want to purchase a house. You did it backwards. You know what I'm saying?
Right.
Yeah, so that's been my biggest challenge. What about you from the lending perspective?
Yeah, I guess credit. It's always credit, right?
Yeah.
Like if the credit isn't right, then we just we could talk about it later. I mean, I have like a team of people that I know that fix credit. So usually what I end up doing is just referring those people over to them and then they send them back to me. But yeah, it's always credit. Like it's always I make $85,000 a year. I should be able to afford a $350,000 house. You're absolutely right. You should be able to afford that. But because
are your habits allowing you to afford that? We do have a question from Mel. I have questions about small business owners or salespeople. How do you calculate the pre-qualification? Very good question. Thank you.
That's actually a really good question. Depends, right? If you are a small business owner, we can actually use your bank statements for the last 6 months to calculate what you will make for the year or supposedly make for the year. Also, if you're self-employed, we can use your 1099 for the last 2 years. We do like to use tax returns for the last 2 years, so we can base it off of that. And now that I'm glad you brought that up, actually, because with the tax returns, like what we like to do, let me not say we, but certain individuals, y'all know who you are. We want the bigger refund, right? Because we want the bigger refund, we have a lot of deductions on our tax return. But let me say this from a lender standpoint: if you make $60,000 a year and you have $20,000 in deductions, you will qualify for a loan based off of based off of an income of $40,000, not an income of $60,000. So that's one thing that you should definitely take into consideration, especially when you're a tax person is doing your taxes. If you have a tax person doing your taxes, and you plan on buying a house within the next 2 years, you might want to take it easy on the return or the refund that you receive during tax time.
Do we have any more questions? That was an awesome question.
Yeah. Then what's up, Johnny? What's up? But yeah, so I mean, especially like if you're W-2, my whole thing with W-2 people, like you guys have it super easy and you don't realize it because you can qualify for a plethora of different types of loans, right? As a W-2 person, and you've been working for whatever amount of years, you can actually use that towards your advantage. You might be W-2 and live in a townhome, but you want to get an investment property. Like, why not? Why not use that? I appreciate that, Mark. Why not use your W-2 to fund an investment property, right? Because we're not trying to be in a rat race forever. You want to kind of get out the game. So the only way to get out the game is using what you have now to purchase other assets.
I'm glad you brought up investments. Can we talk about the difference in loan qualifications from someone who wants to purchase for themselves or someone who wants to invest?
Okay, so to be honest with you, if it's a first-time home buyer, you know what, my answer is actually the same for both. Whether you're a first-time home buyer, if you want to invest, come on in, let's talk about it. You could always schedule a virtual conference call because everybody's situation is different. We kind of want to tailor it towards that person's situation. So let me just say this: if it's an investment property, it may require 20% down. Also, if you're a first time home buyer, you may qualify for FHA, which is asking 3.5%. If you have a 740 credit score or higher, you may qualify for. If you have an 800 or higher, you may qualify for a conventional loan, which could ask for as low as 3%. It all depends on the person's situation, right? Because you could have an 800 credit score, but you can have an 800 credit score and your expenses, your debt to income is at like 60%, you wouldn't qualify for nothing, right? So you have to work on that first.
Okay. And
so it's a little things you can do.
What are your take on the first-time homebuyer programs or the government grants that everybody's trying to get right now?
I'll be honest with you, I'm not a fan. I think they do more harm than good. I think because we tend to focus on the prize or because we want the house, we'll do what it takes to get into the house, right? Unfortunately, sometimes they'll put us in a situation where we end up having two loans on one house. And when I say two loans, like you'll get your regular loan for $300,000 for the house, but then you'll get something because you want to get
second
a program
mortgage
through the city. You'll get it because you want to get a program through the city or through the state, or because you want your closing costs covered. You'll get the city program, which will be like it could be up to $40,000 loan that you would have to be paying off on your mortgage, which kind of it sounds like it's helping the people, but it doesn't really help the people. Because for the same thing, you could always ask for a seller credit. You could ask for a seller credit for up to $10,000, which would help you out, so you don't necessarily have to get the $40,000. But if you don't have any of the closing costs, and once again, like it's roughly about 4.5% to 5% of the purchase price. If you don't have the closing costs, you may not be ready to buy. Sad to say,
Okay, so if someone doesn't have, let's say, closing costs, what advice would you give them? They're missing a piece of the puzzle.
If they don't have closing costs, let's save up. Let's save up for closing costs, right? But I know you don't want to hear that, but that's the truth. If you don't have closing costs, let's save up for closing costs. Team Viking, what's up? But if you want to get into a house and they're willing to give you closing costs and all this other stuff, at least come to the table with 20,000, right? The only thing is, when you come to the table with 20,000, that means that you're looking at a house that's like what 220, 230, and nobody wants to live in a house that's 220, 230, right?
Right. So actually,
we don't like those areas.
Someone asked me yesterday, as someone who's saving up for a home, what should you do? And I said to her, well, save as much as possible. They tell you that you need roughly 3 to 20%. I told her save the 20%, because even if you only have to put 3% down as a deposit, you have closing costs, you have connections, you need water, you need furniture, you need all kinds of things.
Yeah.
So it's not just, oh, I bought the house. There's so many more expenses that go with it.
Right.
Oh, and you also have inspections. Let's not say it. Inspections are expensive. And who's to say you put in an offer, you do an inspection for $500, and then it doesn't go through? You have to start the process all over again. So
and nobody wants to do that either. Like, that's kind of discouraging too. But yeah, definitely for first time home buyers, that's a great point. You definitely as first time home buyers, you will actually not even first time home buyers. Anytime that you have to deal with getting a mortgage, always keep in mind that you're gonna have to get an appraisal and you're gonna have to get an inspection. So you will need funds set aside for those two things particularly. You also want somebody that's good with insurance. That's another thing. Oh, you know what? Also, people don't consider that I just thought about HOAs. HOA fees.
Yes.
Because you could qualify for a loan that's $310,000, right? But that doesn't include any HOA. So that's like a standalone single family house, no HOA. Pretty much you cutting the grass yourself. You know what I'm saying? Like, there's no association that's coming to cut the grass, paying the gutters, none of that.
No
You're
community
doing that on your
pool.
own, right? But with an HOA, your HOA could be $250 a month, $273, $280, something crazy like that, right? Now that throws your debt to income off, and it's an additional little over $5,000. Sorry, and it's additional little over $3,000 a year, right? That wasn't calculated in the beginning, so you definitely gotta. Ron 786 is that for refis too? I don't know what you're referring to. Is that
for refinancing a home? If for the HOA, I believe he's asking.
If you're well, yeah. I'm sorry, Ron. You got to clarify that question a little bit. We're hopping all over the topics, but yeah. But just DM me worst case scenario. But if you want to talk about refis, we can talk about refis. I mean, well, what would you like to know? I'll get back to that. I lost my train of thought, but yeah, HOAs, you definitely want to calculate that in your monthly payments also.
The 20K down for refinancing.
20K down, is that for refi too? Okay. So for refi, there isn't a percentage down per se, right? It's pretty much based on, depending on how you do it. If you're going to take out cash, depending on how you do it, it's always going to have closing costs no matter what. But the refi 20K down, yeah, you don't have to worry about that in a refi stance. So what you would worry about mostly for a refi is if the house has equity. If the house doesn't have any type of equity, you won't really be able to refi. Like, the trick of the refi is to lower your interest rate, possibly pull out money so you can pay debt, like creditors and stuff like that, cars and things like that. But if you try to do a refi and there's no equity in your house, you're dead in the water. You can't really do nothing. Like, you could possibly lower the interest rate, but you may have to pay out of pocket for closing costs. I hope that answers your question.
For everyone who's just joining, thank you so much for joining. If you have a question, now is the time to go ahead and jump in. We've touched on the real estate market. We've touched on the crash. We've also touched on some qualifiers for loans if you're looking to get into a pre-approval right now. So let us know if you have any more questions. Next week, I definitely wanted to dive deeper into the whole saving up. What do you need to do to purchase a house? For the first, maybe it should take you 6 months, I want to say, to save up properly. If your credit is in the right place, it shouldn't take you longer than 6 months. So next week, definitely on Monday, I want to focus on that.
Let me ask you, do you think that buying a house is a 2-year process?
No. It just depends on the person. It just depends on the person and how ready they are. You can purchase a house in as little as 45 days, really.
Right.
If you're ready to go. So without 20K, don't even start looking.
No, I'm not saying that.
No.
Go ahead, you can answer that one.
I wouldn't say don't start looking. I would say The purchase price that you're looking for, make sure that you have savings that would match with that. So make sure that all of your expenses are going to be covered with your savings. Not only just down payment and closing costs, but down payment, closing costs, appraisals, inspections. If you have to move, if you're trying to renovate the property, things like that. I wouldn't say you have to have a set amount. I would say save enough so that everything is going to be covered. And you're not rushing. You're not
Right.
headache. You don't
You
have a
don't want to
headache.
you don't want to just slide in there and think you're safe. Like you definitely want to be prepared for it. 20K. So without 20K, so Cleo asks, without 20K, don't even start looking. Now you definitely want to start looking because you're not gonna one, you want to walk in the path, right? Like if you're gonna be buying sometime soon, you want to start looking between 250K to 300. How much for FHA? Come on, like, all right, Cleo. Sorry, you really took me off my train of thought, but I love it. We're gonna go ahead and do it, right? So FHA is 3.5 of whatever the cost is, right? Worst case scenario, you're dealing with 300K. Okay, I got my calculator right here, so we're gonna do it, right? 300,000. Okay, Cleo, 300,000. Take times 3.5%. 300,000 times 3.5%. You can't really see it because it's backwards, but it's 10,500. No, don't apologize. I love it. Let me see. Hold on. Anyway, so 300,000, right? Now it's 300,000. You're gonna need 10.5 for a down payment. All right. So for your down payment, you need 10,500. Worst case scenario, for closing costs, right? That's 13,500 plus 10,500. You're looking at 24,000 for a $300,000 house, right? Hold on, damn it, I'm gonna get to you next. Yeah. So Cleo, you're looking at 24,000 for a $300,000 house. That doesn't include now your monthly payments and HOA. We didn't go into that, but the amount of money that you want to bring to the table is roughly about 24,000. Now, what you want to do is you want to make sure your realtor asks for a seller credit, right? Because you could get a seller credit. I'm saying 10,000, but you could get a seller credit for 6,000. Now you only got to bring 18,000 to the table. You know what I'm saying? So do you start looking when you have 20,000? No, you start looking when you see something. And if you see something that you like, you try your best to get up to the 24,000, and then have your realtor, you know what I'm saying, trying to work out the difference from there. 50, what's up? Dang it. Oh, dang. Go ahead. You have anything you want to add? Sorry about that.
No, I wanted to. Hippie asked if you can run the number again before we go ahead and ask Damon's question.
Okay, run the number again. The house is 300,000, right? You have to have 3.5 down. So 300,000 times 3.5%. That's 10.5, right? Matter of fact, now your closing costs are roughly about 4.5, right? So 300,000 times 4.5 is 13.5, right? So you have the 10.5 and the 13.5, that puts you at 24. Now what we haven't gone over that Hippie is definitely going to scream at me about is there may be additional fees and charges, but she'll get at me. But we'll talk about that one. But no, but it should be roughly about 24,000, give or take. And then you can make it work from there. Have your realtor ask for a seller credit.
So let's go back and answer Dame's question. He says, been in and out of the chat, but can you be considered a first-time home buyer more than once? I would say yes. I would say yes because after a certain amount of years, it falls off. So yes, you would be able to purchase a home, let it fall off, and then qualify for those programs. What do you say?
Yeah, there's a slight stipulation. You want to make sure that the new place that you're going to is bigger than your current place, and you also may want to be a little bit further than your current location.
So what are the reasons for those two stipulations you gave?
So the reason that the reason that, so you could have somebody that purchases a house, we'll say, a year ago, right? But if they go to purchase another house, the bank's going to say that this is an investment property, right? The only way that it's not an investment property is if the new place is bigger than the older place. So if you're moving from a townhouse to a single family, you move from a 2-2 to a 3-2. You need certain. So from a bank standpoint, they have to be able to see, like, okay, they're not necessarily moving up, but they're moving bigger, right? So because they're moving bigger, they're a first-time home buyer.
Got it.
And then that other place would be used as a rental, investment property, so on and so forth.
Okay.
Hippie, you up? No, it doesn't. Right, exactly. Doesn't include insurance, right? Because insurance. Okay, I know the answer. I'm being a smartass. I got a real question though. Let me know when it's my turn. Hippie, you're up. Yeah. She's a handful, but she's a great person, so I appreciate it. But yes, you also want to make sure, like, that's another thing too. Like when you're shopping for a house, you want to look into insurance, because one house can have insurance of $2,200, another house can have insurance of $3,200. So you want to make sure you have the right person for insurance. So for myself, next time I buy, how much I'm gonna give down? Okay, next time you buy, it depends, right? Yes, we know. She's a businesswoman. She is you. All right, so next time when you buy, technically, it's going to be an investment property. So be prepared to have 20% down. Yes, sir. You own a duplex in a single family.
All right, hippie.
Right. Slight flex. I appreciate it. 2-2. So your next purchase. Yeah. Yo, you're really not supposed to be letting all the cats out the bag, because a magician never tells his secrets. Hippie, like, slow it down.
Uh-oh.
But yes, you pay 3% and a 5% second home, right? So if you get another house, right? There's always, yes, there is, Hippie. And this asking silly questions. But listen, if you get another house, so for Damien, prime example, Damien has his property, right? And he recently had a newborn. Congrats, by the way. If Damien moves to a bigger property, right, he can qualify as a first-time home buyer. Okay? So to answer your question, Damien, you would qualify for a first-time home buyer if you moved into a single-family 3242, whatever your choice is. Hippie fit. There's always a way. Let me just say that there's always a way. What else we got? What's the market? What's your farming area, Alexis?
It's you something else.
Yeah, I gotta switch it up.
I need to buy something in the market cash with 5%. For an investment property?
I got you.
You can hook her up with that?
With 5% down? Yeah, I'll get you something in like Central Florida. Let me know when you're ready. That's another thing too. Like, definitely. The reason we ask for, like, the reason I think it's good for people to have 20% is because they have a thing called PMI. Do you want to go what PMI is?
Private mortgage insurance.
Right. Okay. And on an FHA loan, PMI is with you for the life of your loan, unless you do a refi, which is conventional, and other things. But just know that's something else that you want to keep on top of mind. That when you do go FHA, you will have PMI for the life of your loan. If you want to move into a townhouse and you want the yard cut, you will have an HOA. These are things that you definitely have to keep in mind whenever you want to buy a new property. Time to refi now. Ooh. Good or bad time to refi now? Thank you, Hippie. I think it depends on the person and their situation. For instance, I have somebody that I sold a property to in July of last year. Now's not the time for them to refi because the numbers aren't working right. If you might have purchased it earlier. Yes, if you have a 5.25 interest rate, you might want to speak to me about refi. So I hope that answers your question. It all depends on the person and when they purchase.
All right. That was awesome. Do we have any more questions? Thank you, hippies. Appreciate it.
I appreciate you, Hippie.
Virtual hugs.
Yeah. What else we got? What else we got on the agenda?
Actually, you know what just popped up? Loan modifications. Let's talk about that.
Whoa. Okay.
So the point of a loan modification is to obviously lower your mortgage payments. Why is it that some people are able to modify their loan, but their payments are higher? That defeats the purpose.
That's a good question. You see, they're able to modify their loan, but their payments are higher. It all depends on the situation they were in, right? Because what if they were? Oh, you know what? Prime example. They may be going from a 30-year to a 15-year. Right? So they go from 30-year to 15-year, and they lower their interest rate, but because it's a smaller amount of time, their monthly payment's a little bit higher.
I see. Okay.
That happens often.
Could there be any other explanations for that?
Bad credit. I don't know. I'll ask though. That's a really good question. I'm gonna take that with me.
Loan mods. Maybe we can have another segment. Oh, speaking of, go ahead. Go ahead.
No, I'll address it next week. But that.
Yes, I was actually going to make an announcement. So originally, this was just going to be like an interview between Carl and I, but we actually decided that Carl's going to be a permanent co-host. So yay! Thank you so much, Carl, for joining the Money Monday team. I hope you guys have thoroughly enjoyed this live. I hope it was very educational. I hope you took something from it. We will be back next week, hopefully on time next time at 6 p.m.
We definitely have a few glitches.
We had some technical issues today.
Yeah, I mean, I love it regardless. Definitely.
I'm so happy you learned something, Hippie. Thank you so much for joining the live.
Hippie's the best. But what else we got? Oh, you know what? We will have, if you guys are into fixing and flipping, I know if you might be interested. We're going to have somebody on here, fix and flip. We're going to have insurance people, just to talk about the nuances with insurance.
Credit repair.
What else we got? Credit repair. We're going to have somebody on here for credit repair, talk about that as well.
I want to also talk about bankruptcy because I've encountered a client who went into bankruptcy and she didn't really have to. So I want to touch on that. We could talk about that on our credit segment. We could talk about a debt consolidation if you have someone who wants to come on to talk about those things. So we have a lot of great content coming out for you guys in the next few weeks.
Yeah, definitely full of tips and tricks.
Insurance.
Definitely full of.
Go ahead.
Looking for it. No. I'd like to know what modifications one can do to their property to lower home insurance. But listen, definitely hurricane impact windows, right? What else we got?
Actually, my mother just installed hurricane windows throughout her whole entire house, and her mortgage payments went up because of the insurance. So we would have to come back to you on that, Hippie.
But I'm gonna tell you why they went up. What program did she use?
That's a little.
Wide green or
Wide green.
Okay, cool. So the reason her mortgage payments went up is because it's just like hurricane when they're supposed to. Yeah, absolutely. It's just like with the what's it called? The home buyers assistance, right?
Okay.
What they do is, whatever, they'll come to your house, they'll talk to you about how to make upgrades, this, that, and third, and they'll tell you, like, listen, it's going to cost you $25,000. But on the bright side, you don't have to pay the whole $25,000. What we're going to do is we're going to have you finance it over the course of 15 to 30 years, right? Now, what that does is they add it onto your property tax.
Right.
Because it's added onto your property tax, it causes your mortgage payments to go up, so on and so forth. So you get to get the new windows and all of that, but you are going to pay a little bit extra because you're paying it off over time opposed to paying it in one lump sum.
But if you pay it in one lump sum, it'll definitely have that effect on your insurance, but it will lower your insurance.
If you pay it in one lump sum, you won't have that effect at all because you didn't finance it.
Oh, I see. Okay. So, are there any other ways that you can modify your home, you think, to lower your insurance?
Um, I don't know, but I will have an insurance guy on here that will definitely tell you exactly what to do, what to look forward to, things like that.
What doesn't make sense, Hippie?
It does. What?
Does roof AC replacement make a difference?
Does roof AC replacement will make a difference? Does roof AC
for the insurance? Do they make a difference on the insurance?
I don't know.
We would have to get someone versed in insurance on to answer those questions. Yeah, bring the expert.
I will bring the expert. Relax.
Relax.
I know what you mean. But yeah. I wish Cleo could come on here and talk about her NACA experience.
Yeah.
Listen, I'm gonna tell you guys something.
Uh-oh.
I'm gonna share a moment with you guys. You wanted an audience? Yes, I did. I'm gonna share a moment with you guys. I have a friend that's looking to buy a house. Now, this is a real life story. She's looking to buy a house, and she's gonna get the house that she wants because that's the type of person she is, right? But she didn't want to go through me, and if that's fine. I'm not her or anything like that, right? She wanted to go through NACA, okay? That's fine. You want to go through NACA. But she has complained about NACA every step of the way. And I get it. Whoa, no, it's cool. It's family. It's cool. I get it. But that's what you signed up for. You know what I'm saying? I can't, that's what you signed up for. So you gotta,
But now she doesn't even know if she wants to stay with NACA.
Well, no, she shouldn't stay with NACA. I mean, she should just let somebody help her and do it that way. But I get it. Yes, you definitely get what you pay for. But no, I'm not knocking NACA. I'm just saying that it's not for everybody. It's not. But I forgot. Oh, yes, invite me to the housewarming. Second lights, NACA. Okay, NACA's working. Okay, But what else we got? What other questions we got? Yo, let me see. Who else is on here? I don't know. Does anybody else have any questions before we get up out of here?
Yeah.
I lost you. I can't hear you.
You can't hear me?
Oh, I can hear you now. I'm sorry.
We'll see how it goes. It's going to go great because you have a professional team who are educated and versed. Yeah, so either way we go, the end result is going to be that you're going to purchase a home, whether it's move-in ready, whether it's not new construction, fixer-upper. We're going to get it done. It don't matter. But
that's another thing too.
Okay.
That I would not for nothing. Like if you don't have closing costs, but you have down payment, go look at the new constructions. They can definitely help you with closing costs. That much I can say, and they give a lot in closing costs. So you may have a higher interest rate. You will have a new house, and you may have something that you actually really do like that. You won't be making upgrades and nothing like that too.
Excuse me, that's actually a very good point. Because sometimes with new constructions, they expect their homes to sell quickly. So I've noticed too, when there is a new construction that's been sitting on there, they will practically give it away. So make sure if you're working with a realtor and you want a new construction, make sure they're visiting those new constructions often to see what the best deal is. Like I was looking for a client a few months ago, and they were giving money away for every single thing. So basically, all you had to do was come with your down payment of $6,000, and the house was yours.
It's crazy, and that's the thing, right? Because there's a new construction community. It's somewhere in Fort Lauderdale. I don't know the exacts, but the house is going for $300,000, and they pay for all closing costs. Yeah, that's all closing costs. That means you only have to come to the table with $10,000, and they take care of the rest. 203 loans. Do you do them too? Yeah, I do 203. I do 203Ks. The rehab loans. Boom.
Tomorrow you want to look at some new constructions, Cleo?
You
All
should.
right.
Now, you should definitely check out new construction. And yeah.
Implantation though?
Maybe Fort Lauderdale. I don't think implantation. You know
Not
where there's
in.
definitely new construction at?
I don't-
You know, over there off of Sunrise, and there's two. There's some off of Commercial. Are 203Ks worth it? Yes, they are worth it. There's some off of Commercial, and
There's some in Ives Dairy
Commercial.
right now. Ives Dairy, Miami Gardens area. I forgot what they're called. Who's the builder? Lennar is the builder. Lennar actually
Lennar,
has
yeah.
two new constructions right now. One in Pembroke Pines and one in Ives Dairy, the Miami Gardens area. And the Miami Gardens area, like they're basically done.
Yeah, but it's too much, right? Because they're asking for like 310 starting. Right?
Yeah, they are
The
starting in the
ones over there
300s.
The ones over there in Fort Lauderdale, I
County
think
line
it's
road,
over
exactly.
there. I think it's Sunrise, to be honest with you. But it's a townhouse, if I'm not mistaken. But they are at what was it? 255.
Okay.
And they would give it. Matter of fact, I'm gonna do it. Hey, I got you. They're 255. They offer 6%, right, to the agent, and they do all closing costs.
Awesome. Shoot me over the info for that if you can.
Right.
So
let's
go back to. Sorry, what were you saying?
No, that's definitely something to look into.
Let's go back to Cleo's question about the 203 loans. Those are the
loans. They're worth it.
Yeah.
Yeah, I think they're worth it. I mean, it depends. But not everybody. Once again, not everybody wants to live in something that they have to fix up, right? But how the 203K works is they get you approved. Basically, you'll get approved off of the after repair value of the house. So if you're buying a house at 160 and it's worth 249, you're gonna get the loan plus cost of repairs. So you'll get the 240. You'll get the amount of 249. Now they don't cut you a check directly for 249. You have to go find a licensed contractor, and what they'll do is they'll cut the check to the well, they won't cut the whole amount to the contractor, but that amount of money will come out in draws as the repairs are done until the property is actually fixed. But you would finance that also.
That's awesome. All right. Any more questions before we get off this live?
Right. Who's that?
Thank you so much for joining.
Everybody, thanks for tuning in. You know, I'm glad y'all tuned in. Make sure y'all subscribe. Go to Alexis's YouTube page. Hit the subscribe button. Any questions, comments, concerns, you can leave it there. You can DM me, DM her.
Yes.
Let me see. Tati, what's up? I see you. You could definitely get a tailor-made house if you want. You know, just make sure they have all their paperwork and they're all licensed and contracted. You know, all the good stuff. But yeah, it can happen. It could definitely happen.
Oh, since we're talking about tailor-made, you know where everybody is going right now? Everybody is going to Lehigh Acres. Land is dirt cheap over there.
Lehigh Acres. Is that
closer to Naples?
Where?
Closer to Naples.
Oh, no, not Lehigh Acres. Ave Maria.
I'm not familiar with Ave Maria. I know
it's in the same direction. It's in the same direction. But I think for the same price of the house that you would get in that area, you could also get in Boca and stuff like that. The only thing about that is you're literally taking Alligator Alley west. We do. Yeah, exactly. You literally just take it west, and then next thing you know, it's like nothing forever, and then you're like, oh shit, there's land. You know what I'm saying? Okay, there's houses over here, right? And then I went over there probably a few months back, And what was crazy to me is like I see Panther crossing signs. I'm like, yo, where am I at with a Panther? Like, come on, you know what I'm saying? So it's definitely out west. But I hear, like the houses are beautiful, like beautiful, especially for the amount of money. If you want to spend, if your budget is $250 and you want to go big for your budget, absolutely. Lehigh Acres, Ave Maria, outside away from this.
Or even if you just want to buy land in Lehigh, because the land is dirt cheap, it's underdeveloped, so 10,000 can buy you a lot over there.
Shit, I ain't gonna lie, 10,000 sweet, but I'm trying to get, I need space. What city is that? Lehigh Acres is the city. It's the name of the city, if that makes sense. What's
Do
up?
we have any more questions?
Anything good? Tati, what's up? How are you? Thanks for joining us. We've covered FHA, we've covered 203K, we've covered NACA. Cass, what's up? I appreciate you. We covered, what else we covered? We covered everything.
We've covered a lot. We've covered way more than we scheduled to cover on this live.
You know what? But we're gonna keep doing it. You know what too? What about condos? You know.
Besides the fact that FHA is becoming more lenient with condos are a headache. Mainly because you have to make sure that the investor concentration is 50% or below. And especially in Florida, Hialeah, it's hard. It's hard to get into a condo right now.
I don't know. I mean, as long as they accept it. If we can find you a condo with an FHA, I'm all for it, right? Because condos are usually cheaper. I'm going to get into the condo to purchase. Well, since you put it out there, it's not low key anymore, but I got you. Plantation area, done. Say no more. Yeah, condos are usually cheaper to purchase. I think people that like condos, there's like some people like condos, some people like single family homes, right? For whatever reason. But there are a lot of condos out there now that are starting to accept FHA, which is dope for somebody that may not have like 20% down to put on a condo, or like, you know, they don't have big money. Like they work a 9 to 5, they have a regular salary, you know, they have 401k, things like that, which is pretty cool.
Yeah.
You know, but yeah, that's all I got. What else you got? Who else got a question?
Cash is painful.
We know cash is painful. That's shoe money.
Hippie, you have some amazing questions. Did you have anything else you want us to discuss on this live?
Oh, Alexis, I wish you didn't do that.
Thank you so much for joining, Cass. Please join us next time. We're going to be back here Monday at 6 p.m. You missed the announcement, but Carl is going to be a permanent fixture on the Money Monday Live. So we're happy and excited about that.
All right, I appreciate it. And since there's no more questions,
I think we're going to hit up.
Yeah, we actually had lasted longer than expected.
Yeah.
Since there's no more questions. Yeah, I appreciate y'all, man. Everybody tuning in. Hippie, Cass, Tati, all of y'all. Thanks for watching. You know. Next week, what was that? What was the insurance question again? That's my takeaway, right? Well, we're gonna come up with ways to improve. I guess make your house.
Right? What ways can you improve your home to lower your insurance?
Right.
So next week we're going to be talking more so about the credit and what you should be doing before you actually purchase your home, to get ready to purchase a home. But we can talk about the insurance thing in the same live, even if not the week after.
Yeah, for sure.
Okay.
And if you guys have any questions or any comments, concerns, just DM me, DM Alexis, let us know. We'll address it on the next show.
Yes. Please, everyone, take the time to subscribe to my YouTube channel, Alexis of South Florida Oasis. The lives are going to be live streamed from there every week. Hopefully next week we won't have the same issues as we encountered this week, but we had to get it out. So I thank you so much for taking your time out to thank you, Cass, for coming back. Thank you guys so much for taking the time out to come and join the live with us, join the conversation. I really enjoyed it. I know Carl enjoyed it too, of course.
Yeah, I loved it. I had a great time, you know. I don't really I'm not really, you'll find me somewhere in the house or something, you know, not talking to anybody, but no, this is dope. I had a great time. You know, we have real life situations, real life people looking to buy houses and condos and all this other stuff. So it's dope. We can reach the community. It's amazing.
Yeah, and let's pass on some education to our younger brothers and sisters so they can have an easier time purchasing homes than we did.
Each one teach one. Yeah. And if y'all know anybody that has $20K and wants to buy a house, send them my way. Let's make it happen.
Tell them to call Alexis and Carl.
Yeah. All right. Definitely make it happen.
All right, guys. Sure. Thank you so much for joining the live and watching. We will be back here next week at 6 p.m. So we'll see you on Monday.
All right, deuces. Talk to y'all later.